Citizens of the world, welcome back to another Keep Yours podcast, where we try and keep a few extra dollars in your wallet and try and help you through this crazy system, currently misnamed capitalism. I would call it crony capitalism. But today we are talking about one of the things that has been developed to try and get rid of some of our crony capitalism, and that is Bitcoin. And I've had a lot of people ask me what my opinions are on Bitcoin. Personally, I still have lots of questions around Bitcoin, but it's fun to examine and talk about all of the pieces of it. Now, the problem with talking about Bitcoin is that people seem to sit on one side of the fence or the other, and they seem to be very, very, very far apart, even though I think there's quite a bit of common ground in the middle. So on the one hand, you have people who think Bitcoin is an absolutely worthless asset, not an asset at all, really a liability, should be worth nothing, zero value. You got other people that are on the opposite end that think Bitcoin is going to be the only currency ever again in the world once it finally takes over. And if you ask them any questions about Bitcoin that they don't have answers to, the proverbial answer is have fun being poor, i.e., you're too ignorant for me to explain this to, and since you don't understand it, still have questions and questions that I can't answer, I'm going to default to have fun being poor, and look how right we have been so far. All right, well, there were a lot of people in tulips during the tulip mania, and if you don't know what I'm talking about, feel free to Google that one for yourself and have a little lesson in tulips, where tulips became worth thousands, if not tens of thousands of dollars each in a mass speculation mania that, of course, is now of lore because it really happened, and a lot of people lost a lot of money in it. Bitcoin could be tulip mania, or Bitcoin could be, could go to $1 million. Who knows? I never thought it would make it as far as it has to $55,000 plus. The volatility in it somewhat frightens me, but so be it. I'm more than happy to be wrong on Bitcoin, but I still have questions that there's no answers for. So let's jump into it and talk about it. So the crypto and the Bitcoin debate, right? So Bitcoin promoters will tell you that Bitcoin is the new digital gold, the future of all money and an asset you need to own. Now, interestingly, no one ever refers to gold as physical Bitcoin. So Bitcoin gets all the attributes of gold without having to be physical. Gold gets none of the attributes that Bitcoin carries because it's all digital. So neither are a good comparison to each other, honestly. Now, what may be happening in the marketplace that's driving some of that narrative is that people are buying Bitcoin as a inflation hedge, where previously they would have bought gold, and therefore they're now calling it digital gold. Well, that doesn't make it any more gold than, gold is silver. Silver is silver, and gold is gold, and Bitcoin is Bitcoin. So, the comparisons are often made, but I don't think they're real. Now, there seriously exists long-term viability questions around Bitcoin that the Bitcoin enthusiasts also don't want to answer. And they're believing that there's enough adoption, i.e. $1 billion market at this point, that Bitcoin has to be accepted. And that's not true either. Either Bitcoin's the only asset you need to own in the future all money, or it's a Ponzi scheme with no underlying value. These are our two extreme ends that we end up at. And it's likely that neither is true, and we end up in the middle. But, I've got questions, so let's go through some of the questions, and you can see if you have those, or where Bitcoin might fit into, your potential portfolio. And let me caveat that with saying this is zero investment advice. I am just a guy sitting in his office trying to help people out with some financial education, and a lot of people got questions. So don't take this as a affirmative or a negative on what you invest in. Those are your decisions, and you should speak to somebody with a whole lot more credentials than I have before you put your money at risk in today's crazy world. So what do you get if you buy Bitcoin, right? So much of the focus of Bitcoin is on the price, and often that's the case in the stock market too. What's the price today, and what's the price that I can sell it at later? But the same questions keep coming in with all those things. What are you actually buying? So if I buy a stock in a company, I am buying a right to that company's future earnings. Typically, it also comes with a vote for the directors of that company. So if I don't like the direction of it and enough shareholders agree, we can change that. But with Bitcoin, you're buying what essentially is a digital asset that exists only digitally. You can't take it with you. There's no physical representation. I love that they make these Bitcoin coins like this one right here, even though there's no such thing, right? This is literally all digital. So for younger generations who are used to digital everything, Bitcoin makes a lot of sense. Everyone, if you're younger and you've never actually, a lot of young people have never used cash, as crazy as that might seem. But if you've used credit cards and everything else, then everything seems like it's digital, even though there's a physical basis to it. But Bitcoin's 100% digital. So you get a digital token called a Bitcoin. Now, Bitcoin is basically one specific token on one specific network, that network being the Bitcoin network. And what Bitcoin does is it has a what's known as a blockchain ledger, which is basically all of these different computers keeping the same ledger of who owns the Bitcoin, so that you just can't say, well, I own it today. That has to be confirmed by all the ledgers, and those ledgers everyone can access them. Not change them, but access the information of them. So to create a Bitcoin, you do what's known as mining, and that is you hook up a computer to the Bitcoin network and you run transactions for the network. Essentially, think of it as you're paying the transaction fee, and the fee is then just created a new Bitcoin, i.e. you get a little bit of inflation in terms of there's fewer Bitcoin. And as there's more, the cost to create a new Bitcoin goes up. And they call this the halving process. And so fewer and fewer Bitcoins are created every year, and eventually all the Bitcoins will be created. And then after that, no one is quite sure how the network's going to pay for itself to continue. And even right now, it has costs that also Bitcoin people don't like to talk about. But the cost to create a new Bitcoin is pretty high right now. And therefore, the cost of Bitcoin needs to be high to support that. So what happens if, let's say, Bitcoin dropped down to $20 again, or $2? Would people continue to mine Bitcoin at $2 when the electricity to use the computer to mine the coins costs more than what you're getting out of it? We don't know. Maybe they would. So if you buy a Bitcoin, you end up with a extremely long password that you remember, and that gives you the right to transfer that Bitcoin. And that password is kept and authenticated on multiple computers across the blockchain. And when those computers all validate that your password has been entered correctly, it will then allow that Bitcoin to be transferred to somebody else. So there's a fee for transferring, and basically that fee is how the blockchain is maintained, and that fee goes to the creation of new Bitcoins. And that's the simplest way I can explain how that system works. I think that's a fairly fair explanation of the blockchain network. So as long as the network exists, then your token is redeemable if you can find somebody who wants to buy it from you. And then the transaction price at which you get for your Bitcoin, often these things are going now through third parties, just like when you buy and sell stocks. You don't actually contact Coca-Cola to buy stock in Coca-Cola, and nor do you contact Coca-Cola specific broker for the stock, which they might work with a specific bank, like when they have an IPO. But instead, you have intermediaries who exchange all the shares and do this. And that's basically the same thing that's starting to happen in Bitcoin as well. And I'm not going to promote any of those things, but I'm pretty sure you can just buy it through Fidelity at this point. So most people will now allow you to exchange in Bitcoin. All right, the part that I like about this Bitcoin discussion is it gives us a chance to go back and think about some of the basic concepts of what makes money money, right? And we take for granted that greenbacks at this point, US paper dollars, are money. And that's true as long as people accept them. So what is money? So in theory, money is a store of value. And I can give you goods and services. You give me this store of value. I can exchange that elsewhere. And throughout time, money's been multiple different things, from something as simple as getting paid in rice, because everybody understands weights and measures with rice and how much that you've got. So a cup of rice is worth something comparable. Wampum was used in the United States early on. Pelts have been used. You can trade in whatever it is that you believe holds value. For the majority of the last 5,000 years, that's been gold and silver. And there's a reason for that. So to be a store of value, first it has to have controls against counterfeiting, right? So if you just have a piece of paper and you say, this is money. So, okay, well, I'm gonna make a lot of those and you give me all your stuff for these pieces of paper. And and then I'll go barter and not be willing to accept pieces of paper. So there has to be counterfeiting against it, and therefore to be something physical. And let's think about this before the printing press, right? So we all are used to physical notes now, but printing press has only been around for a couple hundred years. So prior to that, it needed to be something physical and tangible. And therefore it had to be an element from the periodic table that can be proven to be pure. Right, so on the one context, we go, all right, well, I'll accept your payment in gold. So you provide me with a gold coin. Well, how do I know the purity of that gold coin, right? And so we have minting. And minting is basically saying we're proving through a third party that the amount of gold that's supposed to be in that coin is in there, or else it wouldn't have got minted. And the mint is the seal. And from a coinage perspective, it's kind of difficult to mint coins. So you're not just going to see a mint pop up really quickly and easily that's going to fake a gold coin that already exists and put less gold in it, right? But putting less gold in the coins as a way of devaluation is exactly what previous governments have done, the Greeks and the Romans. And this then leads to, everybody ends up finding out about this. At first it's the great big secret, right? That an ounce of gold no longer carries an ounce. It's now 3/4 of an ounce or half an ounce. And we filled it in with other metals, or we coated it with gold so it looks like gold. And then all of a sudden, randomly, someone just happens to scratch that gold coin and realizes that, hey, that's not pure gold under there. Or somebody melts one down to make jewelry, for example. And they say, wait a minute, this isn't pure gold. This material is now separating on me, and I've got multiple things here. So that word then spreads quickly, and then people don't want to accept the coins or want to accept them at a depreciated value. And hence you have the destruction of currency and the destruction of eventually governments. So the other piece is to be money. It needs to be solid at room temperature, non-corrosive, non-toxic, non-radioactive, and malleable at temperatures that you could create, 4,000 years ago. So this leaves us with 5 options based off the periodic table. These are all elements of real things in the world. So we could have gold, silver, nickel, copper, and zinc. And now silver became the predominant change of value. I know we talk about the gold standard and gold being the same thing, but if you look back in history, it was really silver that kind of carried the day. And there's multiple reasons for this. A lot of silver is not as deep in the ground as gold. and therefore easier to extract. And so over human history, we've been able to get at the not so deep in the ground materials a lot before we have industrialization and equipment and specific drilling techniques that have allowed us to go deeper. And so then gold was able to be pulled out. And it's only probably in the last, I'm going to tell you, 200 years that gold's become the predominant feature versus silver. Even in the early colonial times, and even once the United States, after the Revolution, a lot of the currency circulating in the U.S. was Spanish silver coins. And those were acceptable as payment almost anywhere. And they typically had a known amount of silver in them, and that was preferable. Now, so those are kind of our options when we look at base metals that we can actually hold and tangibly have, right? And this is where Bitcoin's something different. But to have a store of value, if we're saying we can now do all this digitally because we don't need it physical, right? Now that assumes that, the electricity and the internet will always be on. And the Bitcoin enthusiast will tell you that they can imagine a world without the internet, without electricity. However, the sun could throw up a solar flare and destroy a whole lot of our technology and electrical capacity real quick. As we just saw in Texas, the power could be out for multiple days from natural disasters. And overall, as we keep hearing all of the time as matters of national security, our electrical grid is at risk of not being able to provide us all electricity. And typically most summers, California has rolling blackouts because their effort to go green without producing the energy first has caused a shortage of energy. So the idea that you're always going to have internet and always, it's just a matter of time in my mind before satellites in space start wrecking into each other and turns the whole solar, our whole atmosphere outside of space, or in shallow outer space, I guess you would say. It turns that into nothing but shrapnel and our satellites don't work, right? Which is a threat to GPS and a whole lot of our communication systems. So the idea that these systems can, and always do exist because they're new and require the power to always be on is not confirmed. But, that's one of the pieces of money. So scarcity is another piece, right? And Bitcoin fits this because it's got a limitation, right? So it can't be easy to create because easy to create is massive volatility, right? And this is actually the problem that we've got right now with our central banks and currency is they can just create however much they want whenever they want. And that's going to cause problems. I can't tell you when, but historically it always does. So that's going to happen. And then relative scarcity. So gold is somewhat more scarce than silver, more difficult to mine. So its scarcity, malleability, and the inability to destroy it, which is interesting, has made it money for a long time. But as I said, silver's been used longer throughout history. And then the third thing that's required for money is we want to negate the third-party obligation. And the third-party obligation, meaning that right now, when we transact in, let's say I write you a check. Okay, so if I write you a check is not currency, right? A check is a way for me to send you currency. But you have to take that check down to your bank. And your bank has to contact my bank. And my bank has to confirm that I have the funds and then send them to your bank. So that's called third party, right? So there is a third party obligation when I send you a check. Now, if I pay you in gold coins, right, there's zero third party obligation, right? If I deliver you those gold coins and you give me food, right, I have my food, no other obligation required from anybody. You have your gold coins, no other obligation. You can go take those gold coins, give them to somebody else. You don't have to go to a bank first and exchange them like you would with a check, right? You don't have to go wait to get what's coming to you. You've got it, right? Now we can conduct the checking transactions very quickly where we can digitally check to see if someone has money in their bank account and quickly transfer it, right? And even with Bitcoin, it can be transferred, within usually 5 to 10 minutes as the confirmation process happens. But again, Bitcoin requires, if I'm going to pay you in Bitcoin, that requires this Bitcoin third-party network to exist, right? Versus if I pay you in gold, no requirement, right? And you could say that for cash, except for there's the requirement that I accept your cash. And this kind of goes into the global payment system a little bit, where we say, okay, if I want to, let's say, import some goods from Indonesia, well, I don't want to exchange in their currency and they don't want to exchange in mine. And this is true the world over. If Indonesia is doing business with somebody else in Mexico or somebody in Brazil, everybody doesn't want to play back and forth with all the currencies because they're hard to value and they fluctuate. And so for global currency, we've used the US dollar. So right now, the US dollar as the world's reserve currency has this stability built into it, but that's not guaranteed, especially as we continue to print more money and just have larger and larger debts. If the world decides it will no longer accept dollars, then you've got a problem. But the world has never decided in any country that it won't accept gold. And so if you have gold in your pocket, then you can go to any country in the world and transfer that into the local currency. Not a problem. Or most people will literally take your coins in most of the world. The problem you end up with that is portability, right? And this is where Bitcoin actually has a huge advantage. From a portability standpoint, what's more portable than something digital? Nothing. Right? Because you don't need to physically carry it versus for me to pay in gold, I have to physically carry it. And that carries another risk, the risk that I might have it stolen from me, right? Versus Bitcoin's got a different risk, which is the risk that you lose your password, right? Or that those coins are stolen from whoever you've got holding them, which has happened a bunch too. So that's what third-party obligation means. So right now, gold and silver are pretty much exchangeable around the world in local currency. Bitcoin's becoming more and more accepted, interestingly. And I think that's because of the name. And that goes into part of the value proposition that all the Bitcoin enthusiasts keep telling me about. All right, so then we've defined what can be money, right? So then what's currency, right? So circulation as a medium of exchange is what we get when we just click on definition, right? So something such as coins, treasury notes, banknotes that is in circulation as a medium of exchange, right? So people want to know what something is worth in a relative terms. That's typically how currency works, is I have a feeling I know what that value is for what I'm selling and or the labor that I'm doing and the amount that I receive, and then I exchange that. Right. And essentially what we're doing is bartering, but with a constant in the middle of a value, which is supposed to be the currency. And that's as simple as currency, right? All right. So Bitcoin is money. So is Bitcoin money or currency? All right. Well, is it a store of value or is it speculation? This is question one. So are people buying the digital asset of Bitcoin because they want to conduct financial transactions or because they're speculating, right? And we're going to go through the difference between assets and speculation very shortly. The second thing is volatility, right? So if something is to be a store of value, you usually need low underlying volatility, i.e. how crazy things will go up and down in price, and how quickly. And the more volatility, because if I sell you, let's say I sell you a car, right? And somebody recently gave this as the Tesla example. Let's say Tesla accepts Bitcoin, which they say they're going to do. Now, they're also saying they're not going to sell that Bitcoin, which makes this a little bit easier, but they're going to throw off all the third-party counter risk on you. So let's say Bitcoin's $60,000 and you buy Tesla Model 3 and it's one Bitcoin. So you go give Tesla one Bitcoin. And they give you one car. All right, well, Bitcoin's pretty volatile. So let's say Bitcoin goes from $60,000 to $40,000 in a week. Very possible. Now, let's say you don't like your Tesla and you go to give it back to them, right? And you say, this is a lemon, didn't work out for me, thanks anyway, give me back my Bitcoin. And they're going to give you back one Bitcoin. But now that one Bitcoin they give you back is only worth $40,000 because the price has fluctuated so much. And you say, wait a minute, I gave you a Bitcoin worth $60,000. And they said, yeah, but we're giving you back one Bitcoin. You gave us one Bitcoin, we're giving you back one Bitcoin. But now the price is exchanged, which is why we don't exchange shares of stock when we go buy a car. So I go to buy a car, I don't give you Coca-Cola shares because I could come back 2 weeks later. They could have had an earnings announcement. The earnings were terrible and the stock drops 20%, 30%, doesn't matter. It's the same principle. And you go, well, then that's why we don't exchange in those things. We convert those over to money, right? And currency that we're going to use in exchange, right? And therefore, Bitcoin doesn't pass that test right now because of volatility. Two, scarcity. Okay, so there's only the 21 Bitcoin limit, passes that test flying colors, right? They can denominate that down into smaller things. Doesn't need to be a Bitcoin. They break it up and call it Satoshis. But the other thing about Bitcoin that's weird is that you lose your password and those coins are lost for forever. And there's a couple obviously big stories out there, people losing potentially millions or tens of millions. Now going forward, it's more likely that these Bitcoin are held in exchanges. People don't necessarily have to remember all these passwords, and that's less. But I don't have a password for cash or gold. I have it. I could lose that physically, right? But it's not gone in the world. So I lose a gold coin, somebody else gets to find that gold coin and it still exists. So there's this weird thing with Bitcoin where all the lost passwords equal lost Bitcoin and they're just lost for forever. And that's just a weird kind of quirk of Bitcoin. But from a scarcity standpoint, Bitcoin passes that test. Third party required. Okay, so you have to have the blockchain to complete the ledger. Again, it's not a physical metal where I can hand it to you or a physical piece of paper where I hand it to you and there's no third party required, right? And so that makes it less useful than it might other be. Now, as long as the internet's connected and everyone can access their coin wallets, that's typically not a problem. Just like most people do most of their transactions right now with credit cards, same thing. Now, that is another question on Bitcoin is the cost for transactions. So to be a currency, the cost per transaction needs to be pretty low. And this is a question on Bitcoin where right now the cost isn't too bad. They're saying and it depends who you ask, but somebody will say it's $2, somebody will say it's $10. All right, so if you're moving something worth a car, $50,000, $60,000, and you're moving one Bitcoin, a $10 transaction cost, no big deal. However, if you're trying to buy a pizza and the transaction cost is $10, well, no one's going to want to pay a $10 transaction fee for a $20 pizza. That's a lot higher. So the third-party requirement and the cost to conduct transactions is questionable. Versus if I'm paying you in cash, now obviously the government had to print that cash, so there is the transaction cost. If I pay with credit card, it's typically a fee of like 2 to 3%. Or if I pay you in gold coins, there's zero cost once that gold has been minted. So there is a cost to mint all the coins up front, but that coin can then be transacted throughout the world 1 million times over with no additional cost. Assuming nobody tries to flake off some pieces of it, which inevitably will happen. All right, so the next question is Bitcoin an investment? All right, and again, the reason I like going down this kind of having these discussions around Bitcoin is that we get to discuss back to fundamental concepts of what is money, what's holding value, what's an investment versus what's speculation. So what is an investment? Again, we could pull it off a Webster dictionary and it says the outlay of money, usually for income or profit, right? I would go, this is what I call an investment. Something that pays you to own it, right? So if you buy a stock that pays you a dividend, you're getting the earnings from that company. And even if it doesn't pay you a dividend, let's say it's Berkshire Hathaway who takes all that money and either buys back shares, which is essentially a dividend in a way, or they're reinvesting the money to make more money, right? Then you have rights to all of those future earnings. So you're still earning the money. It's whether or not it's actually coming back to you that's sort of questionable. But if the stock's paying a dividend, that's obviously paying you to hold those shares. If you own real estate and you rent that out, then you're getting income from that real estate. Or you're living in it, which is providing you that benefit. Essentially, you're paying to own it because you're getting the benefit. So the real estate is paying you. So that's my definition more of an investment. It's something that pays you when you own it. Now, what's speculation? Speculation is the act or issuance of speculating. An assumption of unusual business risk in hopes of obtaining commensurate gain, i.e., the belief that someone will pay you more in the future for something that you buy now, regardless of the underlying value. That's what speculation is, where the price today is not so much the consideration as is the price in the future. So if I'm deciding today where Bitcoin sits in this, well, it doesn't make anything to make me money. So it's hard to call Bitcoin an investment. I would call it a speculation at this point. And that doesn't mean that you cannot make money. Okay, easy already, Bitcoin bros with have fun being poor, right? No one's saying there's no room in your portfolio for some speculation. However, that coin could flip on you, right? Where you're the one right now saying, have fun being poor. Well, what if Bitcoin goes to zero? Because what's stopping it? The only thing stopping Bitcoin right now is the faith in everyone who owns it that it's going to continue to be worth something in the future. But should that trend change, should everyone decide they need liquidity and start selling, the price literally could go to zero because Bitcoin doesn't make anything, so holding it isn't giving me any revenue. So there's no base incentive for me to own it. Let's look at volatility since this is since inception. So basically Bitcoin was worth nothing, pennies, nickels for a long time. Then 2016, a little bit. Then we had the first run up to 20K. Then it came back down to about 4,500. And all of a sudden 2020, when the government starts printing checks and puts tons of money in everybody's pockets, it goes ballistic. Also set up in this are all of these ways to transact in Bitcoin coming online. So whether it's the Grayscale Bitcoin Trust, buying tons of Bitcoin, or other avenues to buy Bitcoin, basically the scream in popularity, we'll call it, that's significantly driven up the price, such that it's really hard to justify an underlying value of $58,000. Meanwhile, I get Bitcoin is going up because of inflation. Well, no other prices are up 5x. Now you've got some other speculation stocks, again things that aren't making real money like Tesla and others that are up similar types of crazy percentages, and therefore that goes to the volatility, right? How are we supposed to use Bitcoin as currency or money when what I'm giving you right now could be worth $58,000, or if it can go up this fast, it could come down this fast, right? You can't tell me the argument of it only goes up because, well, it went up before and it came back down, and it's up again and it could come back down, and it doesn't make me any money just by holding it, and it costs money to transact in it. So these are questions. Let's just look at the last 2 years. The big moves are right here. Last March, before they handed out any stimmy checks and when everyone needed liquidity in the marketplace, Bitcoin fell to about 4,500 again, and then went parabolic. And here's the past 2 years really close up, and you can just see how parabolic it goes. And you can also see the volume of shares down here they're being traded, how much Bitcoin's moving around. All right, so then let's move on to another question. What about central banks allowing Bitcoin? Because the premise of Bitcoin is that it becomes money. And let me talk about one of the things with central banks that I love about Bitcoin, and I love this idea. The idea underlying the blockchain is that this is decentralized authority, right? No one gets to control this. So no one can just print money like the governments are doing right now across the world. They're just creating money out of thin air. And they're saying now there's more of it. And then they're saying there won't be any inflation, which by definition, they're already lying because inflate means to be make more of. So they're making more money instantaneously. So Bitcoin, the blockchain network itself, prevents this from happening. Now, from a fundamental standpoint of money being based on something, I love this idea. However, are the central banks going to allow this? Are the central banks going to give up the power they have right now and the control that they have? And more importantly than the central banks, because they don't make the laws, right? It's what's Congress going to do? And what's the European Union going to do, right? Well, let's look at the people who lead those, right? Because again, decoupling central banks from their money monopoly, this is the part that whether you're a gold bull or a Bitcoin bull and you just believe that the central banks are out of control, and I'm 100% on board with that, they are, right? Then the premise of Bitcoin makes a lot of sense, right? Except for, what do they say? All right, well, let's start with Federal Reserve Jerome Powell, what he said really recently, right? He's saying this about Bitcoin. They're more of an asset for speculation, so they're almost not particularly in use as a means of payment, which I agree with for reasons previously explained. It's essentially a substitute for gold rather than for the dollar, and I think with crypto assets, the public needs to understand the risks. I kind of agree with that and kind of don't. It's not really that important. We move on to Samsung. He says stable coins may have a role to play with appropriate regulation. And what he's saying there and what he said about Bitcoin in general is that they intend to regulate it. And there's multiple ways that they're going to regulate it. Now, the IRS has already gotten involved and they're taxing it. All right. So the moment you sell one of your Bitcoin, that's a taxable transaction based on the price that you bought it for. It's an asset. You bought it. You sold it. Whatever that difference is, you've got to pay gains on that. Now, whether those are short-term capital gains or long-term, probably going to be litigated. And which is why you see a lot of Bitcoin people who made a lot of money in Bitcoin moving to Puerto Rico and other places where they don't have to pay taxes. And Puerto Rico is probably the only out, if you're a U.S. citizen, from paying federal tax. Even if you go around the world, as long as you're a U.S. citizen, they're going to tax you on your U.S. assets. What about in Europe? Well, Christine Lagarde, who's the head of the ECB, she's been a little more proactive in saying that regulation's coming. And what she says about Bitcoin, it's a highly speculative asset, which has conducted some funny business and some interesting and totally reprehensible money laundering activities. Now, you can ignore the money laundering BS of this because no money is laundered more than the US dollar across the world. Now, we could get into the debate of why the US dollar has to be laundered, and that is because we have stupid laws that make all sorts of things illegal, and if we just made those things legal, there wouldn't need to be money laundering, and all of those things would be above ground, people would be protected, we wouldn't have heads being lopped off in the street, and cartels running the show, and we could tax all of it. But I digress. Let's get back to Bitcoin. What else did Christine Lagarde say? There has to be regulation. This has to be applied and agreed upon at a global level, because if there is an escape, that escape will be used, which is exactly what Bitcoin people say, interestingly. Bitcoin people say, well, Gresham's law will apply, that the bad money will drive out good money, and if they make Bitcoin illegal in US dollars or European euros or anything else, they'll go to where it's not illegal, and they'll just conduct it in that currency. Which sounds nice, except for if you're a U.S. citizen and they make that illegal, like they made holding gold illegal in the 1930s, that's going to be hard to do. Because the idea is you need to get your money out. But if everyone knows that's coming, and as soon as they propose these laws, I promise you everyone is selling. And that's the question. What happens when everyone decides they want to sell Bitcoin and the news gets bad instead of good? Yet to be determined. All right, so here's my cryptocurrency summary for you. The underlying technology versus some unanswered questions is really what it comes down to in my mind. And then we'll talk about how that might fit into your world. All right, so the blockchain technology itself. I like the blockchain technology. I think this makes a ton of sense. It's going to be used across the world for all sorts of things. Lots of contract stuff. Think of a title on your car or your home that could be decentralized. And instead of having one county office that's required to keep record of all that, you got to pay a title company $1,000 every time you want to refinance your house or get a new loan. You got to pay them to make sure that the title on your home is free and clear. Well, that could be done on blockchain very easily. So there's a bunch of technologies that could reduce our costs that make sense. And if you look at other coins like Ethereum and others, this is the technology they're trying to promote, and they're saying their coins are going to this, and the money people have paid for these coins go into those processes, and as they're developed and rolled out as technology, then people will make money. Yet to be determined if actually people will make money and get a dividend, as they say. All right, so the things I love about blockchain, the technology is not state-owned, because let's just be honest, our government can't be trusted. That's just plain and clear. Trust in government and our institutions seems to be at an all-time low, and I would say for good reason, because they shouldn't be trusted, because they haven't earned that trust, and in fact, they've done the opposite, and that's across the board. And anyone who would like to debate that, I'm happy to discuss that with them. All right, so blockchain and Bitcoin specifically create a unique type of commodity produced with electricity, which is this digital coin. It's portable and it's verifiable. Those are good things. It requires security transaction codes to be redeemable. So that gives another level of security. Now, there's some question if quantum computing really takes off, that the quantum computers could override this. Now, the one downside in terms of it does require that blockchain to continue to exist and conduct transactions for this to be used. So currently, Bitcoin is not currency. The latency of the system can conduct transactions and requires that ongoing liability of having the network up. Plus, there is a transaction cost that means it's not really usable in everyday commerce. All right, so here's my unanswered questions. If we can create another blockchain-based coin tomorrow, why is it Bitcoin that's going to rue the day? Why isn't it Dave Coin or Dog Coin or any other name? Why is it that Bitcoin is the coin that wins? And I can tell you what the Bitcoin people say, which is, oh, it's got the name and that's what's known around the world already, so Bitcoin's going to be here to stay. Well, that was also true of AOL, and that's gone. And now it's all Google. So first to market is rarely ever the last to win. And that's just a reality in technology in general. So Bitcoin's the first technology that shows us blockchain. That doesn't mean if we end up with blockchain used for currency, it's Bitcoin. Now, Bitcoin people would tell you that it has to be. They can't tell me why it could be. It couldn't be another one. Why can't it be? Why can't I create Dave Coin tomorrow with the exact same features of Bitcoin? Minimum 21 million. Now, what if I up the game on this and I say, not only am I going to create this coin, right, but I'm going to back it by something physical, like gold and silver. So what if I made this is what they want to call a stable coin, right, which is supposed to be based on some actual currency or something physical. So if that was based on something physical that you could then exchange that for and redeem it for, well, to me, that's got underlying value a lot more so than what Bitcoin has right now for underlying value. So functionally, as we've discussed, it's not used for currency. It's not used for, you're not going to go buy a cup of coffee with Bitcoin. It's just too expensive to transact in. It costs more than it would cost more to do the transaction than your cup of coffee would cost. So, and then we have the other question, will the central banks ever allow it to be used? And my answer to that, based off what they've said and their intent to keep their power and control being the money printers, is there's no way they're going to do it. And I don't know how they're going to deal with this. I wouldn't doubt that they could throw it under some national security nonsense. The Bitcoin people seem to think that because it's got $1 billion market cap, they won't allow those people to take their losses. I disagree with that completely. I think they could care less. $1 billion is a tiny market overall. It's not. It's Apple going down 5%, right? That's $1 billion. Big deal. Apple goes down 5%. No one's crying in the street and the whole system's not broken. So they could make Bitcoin zero tomorrow. Now, one of the other things I've heard proposed is that they may get the IRS involved and do mark-to-market rolls on that. Basically saying that at year end, whatever your Bitcoin is worth on that day, you've got to show that gain and pay taxes on immediately. And that would cause a lot of liquidity issues immediately for everyone who's been holding. But who knows what they will do. But according to the ECB and the Fed, they're looking at it, which is government speak for we don't like it and we're going to do something about it. At the end of the day, for me, the underlying value, why is Bitcoin worth something? It does not make me any money. So it is not an investment because it does not make me money. Somebody else has to pay me more for it than it's worth today. I cannot rent my Bitcoin out like I can my house and collect rental income. Now, maybe there will be a futures market for Bitcoin where they're saying, yes, you could rent your Bitcoin out and get it back, but I wouldn't want to because of the volatility. How do I know? I rent it out to you and then it drops 50%. I don't get a chance to sell it, right? I mean, that happens with stock shares today too, but this is different. This is really speculation. So here's my last question that nobody really wants to answer, because if you turn on CNBC every day, it's telling you that you need Bitcoin. Well, if Bitcoin doesn't make anything, doesn't make any money, then who's paying for all this advertising? And that means they're either charging high transaction fees to exchange Bitcoin in these trusts that are holding it for you, which is possible and probable and actually likely. I'm sure the Bitcoin Trust has a nice fee attached to it every year that most people haven't looked at or looked into. And we'll just say, well, it's such a small percentage and Bitcoin's going to go to $1 billion anyway. I mean, I don't know why the future price of Bitcoin that they give some people, it's 100,000, some it's 1 million. Why isn't it 100 trillion? Why isn't it seems to be that it could go to infinity. And if it go up to infinity, that means it can also go down to zero. And it'd be very interesting to go, who's paying for this advertising and why? Because I guarantee you that during Tulip Mania, there were a lot of advertising being made. And actually, you had a tulip, but a tulip, is a flower. It's, you can grow one. So what's it cost me to grow it? I'm not going to pay you more than that. So why is Bitcoin being advertised? It's an asset that doesn't produce anything. I'm confused on this one. But that's just me. Now, if you want to hear both sides of the debate, this is the best place to go here. It's not me talking about it. I'm synthesizing all the information that I've accumulated over the last few years, as well as some of my personal thoughts, and as well as listening to these smart guys. So this podcast is still free. I know down here it says that, you got to, as of February 1, new episodes behind a paywall, but this is before that. It's before Grant Williams put all of his podcasts behind a paywall. You can go to Apple Podcasts and you can download this, no problem. Mike Green and Nick Carter. And I've never heard of more bull than Nick. And Mike Green is a brainiac who breaks down money, currency, Bitcoin, regulations, all the stuff that I just went through and talked about better and smarter than I ever could. So if you want more of it, there it goes. But the underlying question is that everyone keeps asking me is, do I need Bitcoin in my portfolio? And I don't have an answer for that. That's a personal question. But here's what I want you to know. And it comes down to portfolio construction. And one person I love who talks about this all the time is George Gammon. And he talks about his 10-80-10 portfolio and the way that he does it. And he says, I have 10% of my money in gold and silver, and that is my insurance. In case there's a monetary crisis, it's basically my savings in a place that it can't really deflate as much as currency could quickly. And in fact, more than likely, if the currency deflates, the value of gold and silver will inflate. I agree with that 100%. Then he says 80% of your portfolio is for things that pay you to own them, i.e. investments, whether that's real estate, whether that's businesses, stocks and bonds. Not so much on the bonds these days, very low coupon rates, a little iffy. Unless they run rates negative, and then those bonds will be worth a lot more. And they could do that as well. So what do I know? But the last 10% is speculation. And I talk to people about this in terms of like gambling money. So to me, if I'm going to buy Bitcoin, I'm buying Bitcoin with my gambling money. Speculation. And the thing about gambling is, the first rule of gambling is you do not ever, ever gamble with money you cannot afford to lose. If you walk into a casino with your last $1,000 and you cannot afford to lose that, or you won't be able to pay the rent, I would put 99% odds on the fact that you lose all that money. Now, if you walk into the casino with $1,000 that, you were going to spend anyway on something frivolous that didn't matter, or just go out and have a ridiculously nice dinner, you could easily drop $1,000 with a couple of friends and a few bottles of wine. Then you go, okay, well, this is my gambling money. This is for fun. So if I lose it all, it doesn't matter. So that is the investment I would make in Bitcoin. I would make it with money that doesn't matter. Now, for many people, that's going to be a stimmy check because, hey, it's free anyway, so might as well roll the dice and try and, load up on something that could go up. But the other thing is Bitcoin's had a big run already. And I have a feeling that the Bitcoin staying at 55,000 and above is going to have a lot of FOMO behind it. So now that it's risen up and everyone wished they would have bought it before, now they're going to rush in and buy it now. And then those who were holding before, hoping that it would go up, will start selling, and everyone who was late to the game be left holding the bag and take the losses. That's typically how these things work. That's typically how most of these, I don't want to call Bitcoin a pyramid scheme because they're not lying about what they're selling and it's not multi-level marketing. But somebody is marketing Bitcoin when Bitcoin makes no money. So that bothers me a little bit. I don't feel like it's one of those things that should have ads out in front of it because if you're looking at it for, the inflation hedge, well, the volatility prevents that. You never see, gold doesn't go up 5x in 8 months, nor does it go down as fast as Bitcoin's gone down, or you can go down 30% in a day. That's a lot of volatility. So just know that if you're buying into Bitcoin, you're buying into that volatility, and that volatility is probably going to increase a lot until everyone understands what the rules and the governments are going to put on it and how it's going to be accepted in the marketplace. And, that's my 2 cents. So does it make sense in your portfolio? If you're into speculation and you want some of that, go ahead. That's with all the digital coins. None of them are currencies. We've established that. And none of them are actual physical coins. So they're all digital representations of something. But that's my 2 cents on Bitcoin. Hope that helped out with your understanding of it. Whether or not you need any of it is completely up to you. Personally, I do not hold any crypto assets. I haven't had all of these questions that I have answered. I wish I had speculated in some beforehand. Of course, who doesn't wish that they got the big 100,000x run up? Everyone does. But that doesn't mean I'm going to jump in the game here late with Bitcoin at a staggeringly high price. So I pay $55,000 and I own a digital coin. I have other things to do with $55,000. I would like to buy something that actually pays me to own it. Now, that doesn't mean I will never speculate in Bitcoin or other crypto assets. It just means that, I'm an old school value investor, and until you can prove to me the underlying value of something, it's hard to get me to put my investment dollars to work because, I like the investment part that pays me to own it. So that's where most of my money goes. But I do gamble on stuff from time to time. And I wish I had taken a flyer on Bitcoin. But the past is past. I do believe that the central banks are going to come down on cryptocurrency in a very harsh manner, in a way that is going to completely prevent it from taking over any of the power of which the central banks hold. For us to get that power back, we as a nation probably need a revolution to do that. And I don't know that that's in the cards anytime soon, but it could be. Who knows? We're definitely set up for the fourth turning and a whole lot of change. So that's very possible that we could get back to sound banking in America. And that's the part where I think that the Bitcoin enthusiasts need to appreciate that if you're Bitcoin because you're anti-central bank, then other people who are also anti-central bank, because they don't agree that Bitcoin is the complete answer, we need to be allies in that discussion, not fighting amongst ourselves constantly over what's going to be the winner when the current central bank is dethroned, so to speak. It doesn't say, it's posturing at this point, saying, well, I want my thing because I'm invested in that thing. Well, that's not how we actually get change within the central bank. So we all have a fundamental reason we want the central bank to change, and that's because they can't explain the job that they're doing and why their tools don't work. And we all know that it's a bunch of BS. And they're just printing money for the government whenever they want, which is why governments love central banks. And the series that I'm doing on the history of finance in America, I'm about to go into deep detail on central banks in America prior to the Fed. And none of this stuff is taught in school. And that makes it harder and harder for people to understand. And I have no doubt that the financial system not being tangible anymore, where it used to be backed by gold and silver and people could tangibly understand value in transactions. And they've intentionally separated that. And I don't think that central governments are going to allow Bitcoin to take over that position. And if we want to get back to sound money, we'll call it Austrian economics for easy thing. And we want to get back to free markets because let's make no mistake, with the Federal Reserve involved, there are no such thing as free markets, right? This is not capitalism. All of the problems we have now, every single thing that's blamed on capitalism, I bet if we dig deep into it, not a result of capitalism, result of crony capitalism, not a result of free markets, not a result of the free float of gold and silver as money. Instead, manipulation on manipulation, private interest groups manipulating, money printing, manipulation, and transfer of wealth, right? Where they are basically stealing all the money from Americans via taxation without representation. So this is where I think a lot of people agree on things, and where I would hope that the Bitcoin enthusiasts would stop telling everyone else that if you don't understand Bitcoin, you're stupid and have fun being poor, and instead have a conversation about, well, I really don't like central banks. So Bitcoin offers us another path forward. There may be other paths forward, and I'm open to those as well. And in that context, I'm not anti-Bitcoin, right? I don't understand it, and there are questions that haven't been answered. But that doesn't mean that I would be against Bitcoin being the new answer, right? Of how do we prevent the escalation and money printing that we have now, and the power of central banks and governments to control our lives when they're going further and further with it, right? Here comes the digital dollar next. And that's going to be more and more control for authoritarian regimes and turning regimes into authoritarian regimes. And that's the part that I think we can all agree on. And we don't need to fight about who's got the right answer. And, I almost feel like Bitcoin is a symptomatic of what's going on right now, where we've got a bunch of super woke folks who are right, and they're claiming the banner of righteousness instead of wanting to have serious debate about things. And so my appeal to the Bitcoiners, I'm more than willing to sit down and talk to any of you about it at any time. The hate is unnecessary, and let's find the common ground where we can go all get along instead of finding the piece that we disagree on and just fighting about that and then calling each other names and basically saying each other are stupid. Instead, to me, the most exciting part of Bitcoin, we'll call it coming out, is that a lot of people are getting education around our central bank manipulation. And that's a positive thing, because that's something we're going to have to change going forward to get back to a real economy instead of this BS economy that we have today, where the Fed's in charge of everything. All right, that's all I got for today. Hope that was entertaining for you. Please pass it on to friends and family if you think they'll enjoy. Thanks for listening. Catch you next time.